All right, so we're going to get started with this section by discussing what the income statement is, and then we're going to dive into some of the specifics later. So you're going to hear this statement referred to as many names, including the profit and loss or the P&L, the statement of operations, the statement of earnings, and several other names. The income statement is used to track a business's historical performance and to make predictions about the future. So let's explore this concept in a little bit more detail. Okay, so in its most simple terms, the income statement is a record of how much value a business generated or lost over a period of time. Value is measured by net income, and the calculation for net income is revenues minus expenses. Revenues reflect the total value of products or services sold, and expenses are the costs that are related to generating revenue. Some common examples of expenses include salaries, rent, utilities, loan interest, and so on. Categorizing this even further, expenses may be classified as cash expenses or non-cash expenses. Now, in general, a cash expense is one that reduces net income and cash, and a non-cash expense reduces net income, but it has no impact on cash. And we'll discuss this in more detail in a future lesson. Now, income statements may be reported on a cash basis or on an accrual basis. Under the cash basis, a business records revenue when cash is received, and it records an expense when cash is paid. You may see small mom and pop type businesses using the cash basis, but you'll never see large or publicly traded companies using the cash basis. Now, in the accrual basis, on the other hand, revenues are recorded when services are performed, and expenses are recorded as they are incurred. Because accrual accounting provides a more accurate overview of the revenue and expenses incurred during a period, publicly traded companies are required to report their financial statements on an accrual basis. Let's take a brief look at what an income statement looks like in practice. Okay, so here we have a very basic P&L to demonstrate how the statement is formatted. Revenues are always listed at the top, followed by expenses, followed by net income at the bottom. Now, depending on your experience level, there may be some terms on this slide that you're not quite familiar with, and we'll dive into these later in the next few lessons. For the next video, we'll take a look at a private company's income statement in practice.